This summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.
Hello, everybody, and welcome to another edition of iGaming Next Weekly News Live. I'm joined this week by two absolute legends in Nico and Connor. I'm sure our audience will agree. Guys, how you doing?
All good on my end, Jake. Thanks for asking. How are you, Nico?
I'm perfect. So I had a nice skiing vacation to a skiing resort close by. Still got 2 arms, 2 legs, 10 fingers. So no breaking bones. So all good, all good. So Jake, how are you? How are your teeth?
Teeth are good, yeah. Thank you. I missed last week. Trip to the dentist, which is never a nice thing. But similar to you, Nico, I've come back with all my arms and legs intact. So I can't complain. And my teeth, actually. So an added bonus there.
It's terrible timing, but of course you had to have your dentist appointment at 2:30. Hey, Jake. So hang in the middle of our weekly live broadcast.
Very good, Connor. Very good indeed. I want to reference Phil Pearson's comment on the chat, which says, the intro video for Next is quite good. And I have to say, I agree. Watching it there, it's got me well excited for it. And what a promo video that is. So well done to our marketing team. You can buy a ticket on our website. So please do get one, because it looks like it's going to be a hell of an event and it could well sell out. Connor, have you been working out? Nico, have you been working out to get your bodies sort of swimming pool ready for that Showers pool party? That's a little bit of both of you, isn't it?
Absolutely. Yeah, you know me, Jake. I'm a swimming enthusiast. I'm forever diving in the Thames here in London and swimming up and down. So, of course, I'll be beach body ready by June. I have no doubt. Yeah, I'm a big exercise enthusiast.
Good man. What about you, Nico? Have you got the fake tan?
No fake tan, no fake tan. So, cutting a long story short, and lightning should strike me if I start lying. I used to do an internship as a lifeguard back at Malibu Beach. So there ain't no party, especially a beach party, where there's no lifeguard around. So consider me being in as the lifeguard. And probably next week I will just share a picture of me standing at one of the towers and just overseeing the beach of Malibu Beach. It's a true story.
That's amazing.
Means we'll be very safe at Showers then. Something to look forward to there for sure.
Yeah, Nico going full David Hasselhoff in the red swimming trunks as well, I imagine. Great to see.
Yeah, probably not running in slow motion. Although when I'm starting running with my pretty much injured knees, it looks like I'm running slow motion. Although I'm doing full throttle, but never judge a book by its cover. As long as nobody actually dies and suffers on my beach, job's done.
Yeah, the event will be a success. There we go. I also want to say a big hello to everybody that's joining us. Hello to Elizabeth, to Katie, to Suraj, Henry, and Joseph. Really great to have you with us, guys. Feel free to comment throughout today's stream. We've got a busy one for you. And before we introduce our topics, I also want to say a big thank you to our main sponsors in Playson who make this possible every week. So thank you very much, Playson. It was their own awesome video that ran at the top of the pod as well. So some breaking news, actually, fellas, before we get onto today's agenda that came out about an hour before we came online. Is that the Premier League and its clubs have agreed to withdraw gambling sponsorships from the front of their shirts. Quite interesting. Obviously, we knew this was, in the pipeline with the Gambling Act review, apparently ready to be published, possibly even on Monday. So this might be the first kind of concrete, decision that we've seen as a result of that. What do we think about this?
Well, you're right, Jake, in that you say it will be the first concrete decision and the first time we get some certainty. But if I can refer our viewers back to last week's Jake's Journal, you set out the fact that actually this is all going to probably be a bit of an anticlimax. We kind of feel as if we have quite a good idea already of what's coming. And obviously the shirt sponsorships was a big part of that. And I think by the looks of it, I haven't had a chance to read this, but it looks like it's a voluntary, it's something that the Premier League clubs have agreed to on a voluntary basis.
That's right.
Of what's coming. But yeah, I think, I wonder if there'll be any big surprises in there. There's a lot of information that's leaked out already with regards to stake limits, affordability checks, hopefully a bit of liberalisation in the land-based sector, actually, and a kind of slight tightening of online to kind of redress the balance a bit there. But yeah, you're expecting to see any big surprises, Nico? Anything you think might be a bit of a shocker for the stock market?
So not a shocker for the stock market because getting to the basics. First of all, the ban comes into force season 26-27. As of now, it's currently worth combined £52 million with Everton, Stake, and West Ham Betway, £10 million each. Being the biggest ones. It will be surprisingly if Stoke makes it back to the Premier League because they are owned by Bet365. I don't know how this comes into play. If we're speaking about front of shirt sponsorship banning, and out of a sudden it's like, okay, so the owner of Stoke, just look it up on Wikipedia. It's Bet365, which is quite interesting. So I don't know how this fits into the equation from today's point of view, but we'll never know.
Yeah. Well, like you said, Nico, there's a number of kind of workarounds to soften the blow for gambling companies. You mentioned this is kind of 3 years away at the very least, so 26-27 season. They're also allowed to still sponsor like the sleeves, for example, of football shirts, just not the front of shirts. So it's certainly not kind of a hard stop on gambling sponsorship, but it does at least mean there will be no front of shirt sponsors. If that was in place this season, that would leave 8 Premier League clubs without front of shirt sponsors. They are Bournemouth, Brentford, Everton, Fulham, Leeds, Newcastle, Southampton, and West Ham. And obviously, you've mentioned the gambling companies that they work with. So, interesting move. Whether it will be enough to kind of dissuade the sort of gambling reform lobby from pushing harder remains to be seen. This seems like a bit of a win from the industry, I would suggest at first glance. But yeah, very interesting.
Just
nothing.
You've had a chance to look into this more than me. Was there any comment on in-stadium sponsorship for gambling firms? Because for me, I think if you're watching a match, that almost looks more prevalent to me than the shirt sponsors. And obviously, it's a huge asset for gambling firms. And I suppose one of the arguments for keeping shirt sponsorships would have been the argument that it provides more money for the clubs, but actually it will probably mean that there's more of a premium on the gamblings on the places where they can advertise. So in stadium, you probably see the prices for that go up, I would expect.
Well, to answer your question, advertising, hoarding, and sponsorship is fine beyond 25, 26. So that will continue. And also, gambling companies are able to actually strike front of shirt sponsorship deals in between now and 2025. So, it's not like the awkward situation that kind of Spain, I think, found itself in, where the league already had 10 gambling sponsors, and then all of a sudden the clubs had to find somebody brand new to fill the gap. They've certainly secured their finances for the next few years, at least. And Danny Carrington makes a funny comment in the chat. He says, back of shirt sponsorship will be the new front of shirt sponsorship. So you can always rely on the gambling industry to find a loophole. I wonder if that will be one of them.
Yeah, this pretty much, there was also a funny story in the Italian Serie A when 1xBet was one of the league's sponsors. They had a carpet which was placed at the goals, both ends. League was full running, and then somebody actually realized, okay, so 1xBet, they don't hold a license here in Italy. Why are they able to, advertise on our Serie A? And then, out of a sudden, carpets were gone. So that was quite interesting as well. But, Italy is always good for a funny story.
That is true. We also saw in Italy, I think, when they basically banned kind of sponsorship in football, some gambling companies took an interesting approach where they moved into kind of sports news and sports media, and instead of branding it as their company. So I think Betson had an agreement with like AC Milan, for example. So they had an AC Milan branded news website, and that worked kind of like an affiliate portal. So I don't know whether we'll see that in England. It seems like there's not really any need for that at the moment, but there are definitely kind of ways around stricter bans as well. But very interesting and nice to have some clarity. I'm sure the industry will be getting up extra early on Monday to check their inboxes to see what other things might have been confirmed as a result of the review. But I think we should move on to our next topic actually for today, which is basically a little Q1 recap. Obviously, we've just seen the back end of March, but instead of looking at kind of financial performance, we're going to be looking at the performance of some gambling industry stocks and the winners and losers on the stock market over the past 3 months. Just before we get into this, oh no, goodness me, my producer, Elizabeth, has just reminded me the audience kicking off. We've not had time for 10 and 5 yet. Nico, I'm so sorry.
Oh, good. I was just writing this in the chat as well. Maybe you just, wanted to send out a message to me like, okay, no more 10 and 5. All good. So
I've had a week off, Nico. I'm rusty. I've forgotten the running order. You carry on.
Good. No worries. I can just jump in. I'll just jump in. So once you just hit the kind of start button, I will just start. Yeah. So there are no new news on the horizon for online sports betting in Brazil, as it will be taxed with 15%, and licenses will require an investment of nearly $6 million. So the government of President Lula has outlined in a draft sent to the Office of Attorney General of the National Treasury, PGFN, the taxation model for online gambling. So according to this paper, which has been sent, the executive branch proposes a 15% tax on GGR, so the gross gaming revenue, or gross revenue minus prices paid, and the value of the license. It will be valid for 5 years, and it will be it will cost 30 million Brazilian ruble, which is equivalent to nearly $6 million. Another market which might open up is Albania, as they propose an AML stringent law to end gambling prohibition. So the overall GDP of Albania is as big as Malta, just to give you a little bit of a feeling what numbers we're talking about. So since 2019, Albania has outlawed gambling except within state-sanctioned casinos. However, now they're composed by the Ministry of Finance and Economy, The draft law aims to establish a regulated online gambling marketplace to be serviced by licensed businesses adhering to stringent AML and customer compliance requirements. Just remember, usually a market opens up as soon as the tax regime is in place, and or within Albania as soon as AML stringent laws are in place as well. Heading over to India is also quite interesting market. India amends tech rules to identify real money games. As of now, India seems to be a little bit grayish, blackish, and introduced in February 2021 by the Indian government. The information technology rules of 2021 are standards and requirements to regulate online content and platform, including social media intermediaries, messaging services, and digital media publishers. So this has gained an update, which now reads as the new amendments now recognize online real money games as those where users deposit cash or other valuables with the expectations of winning. So just remember, they already discussed the new tax regime. As of now, they will just ban anything else, and then the new overall licensing regime will come into place. So besides Brazil, Albania, India, these are the three top-notch markets we will discuss. So heading over to Sweden, the almighty Spelinspektionen, they will receive a further 2.4 million Swedish crowns to its 2023 budget allocated towards safeguarding Sweden's regulated online gambling marketplace. Just keep the 200,000 euros, which are equal to 2.4 million Swedish crowns in mind. We will get back to this one later. So the Nordic gaming company PAF has once again chosen to lower the mandatory loss limit. So they reduced the loss limit for people aged 18 and 19 from 10,000 euros per year to 1,800 euros. For the 20 to 24 years old, to 10,000 euros, and each and everybody being older than 25 years of age has the overall limit has been reduced from 20,000 euros per year to 17,500 euros. And the overall costs are estimated from PAF with 7 million euros annually. So they're taking responsible gaming quite serious. Then one of the sad stories for this week's Green Jade Group has shut down. So one of the industry legends and former CEO of Mr. Green, and then heading over to being the chairman, Jesper Kjærbrings, Green Jade Group has shut down business. Benedict McDonough, the co-founder of the company, made an announcement in a LinkedIn post on April the 8th, stating, he said the company never found its hit and did not luck out with a perfect recipe of timing, math, features, and front end. So they didn't crack the code, unfortunately. You see, even legends can stumble, but they will always get up. Heading over to one of the investments. Video King has been sold to Every for 59 million US dollar, and it will offer another level for growth. So money will be spent quite interesting. Then heading over to the US, Sportradar extends with college sports Big Ten network. As we all know, one of the leading revenue times is March Madness, which is the NCAA basketball final. And as of now, Sportradar has renewed its partnership with the overall broadcaster and right owner, Big Ten Network, to power its OTT platform until the end of 24-25, including the college athletic seasons. Now, just remember the 200,000 we spoke about. Washington, D.C. has been criticized after problem gambling funding has been stripped from the 2024 budget. So usually they allocate $200,000, which are proposed or which have the obligation to dedicate betting industry towards addiction prevention. As of now, you could guess like, okay, why do they actually strip down these 200K? For one pretty simple reasons. In the previous 3 years, these 200K have been approved for services, but no money was ever actually spent. So there are 600K still in the budget allocated. That's why they just stripped it for the 2024 budget. And last but not least, New York sports betting shattered its previous record with an all-time high monthly revenue, GGR, of 163.6 million in March. As we all know, and just remember, NCAA basketball tournament. So this impressive revenue figures was driven by a 9.1% in hold, with a total handle of 1.79 billion US dollars, which is just a little bit under the all-time record of 1.8 billion, which was set in January. So these are my 10 and 5.
Thank you very much, Nico. Great job, as animated as ever there, my friend. And yeah, our viewers can kind of put their torches and pitchforks down now. Katie especially, I think, would have been after me had I forgotten all about 10 and 5. There we go. Great job. I won't give it the big long intro on the stocks story now, as you heard it just before, but I think we have a graphic from Online Gambling Quarterly ready to show you that just encompasses it quite nicely right the way through there, from the winners to the losers. So as you can see, DraftKings, the best performing gambling stock of Q1, with the stock up 75%, all the way through there to 888, whose troubles we have covered fairly extensively, with unfortunately a minus 41% performance in share price. So we're going to look a little bit at the winners and losers, maybe a deep dive on DraftKings to begin with, gentlemen. Conor, coming over to you, why do you think investors have been so bullish on DraftKings recently?
Yeah, good question. I think DraftKings started the year probably undervalued. That 75% increase you talk about is up from about $11 at the start of January, which I think is a pretty cheap price for the second biggest sports betting operator in the US. I think that was probably trading at a discount because, well, it's fair to say that investors lost a bit of patience with DraftKings in recent years. I think, you know, there was a lot of buzz around sports betting ever since 2018 and the repeal of PASPA, and there were some huge rallies in some of those share prices. And then there was kind of a period of sort of disillusionment, I think it's fair to say, and those share prices did come tumbling down. So if you look back to DraftKings all-time high, those shares were trading for like $70 plus in March 2021. $72 was the peak, I believe. And if you do look at the chart over the last, say, 5 years and see all those peaks and troughs, it looks like that $10, $11 mark is kind of where the stock has bottomed out. I would be surprised to see it dip back below those levels now. I think that, you know, from the beginning of the year, investors have probably been hedging their bets a little bit and waiting to see what actually came out of DraftKings Q4 and full year 2022 results. And in the end, although the business has still not turned to profit, the results did look quite positive. So Q4 revenue was $855 million, which was an 81% increase to the prior comparative period, so Q4 21. So they've nearly doubled their revenue, quarterly revenue, from one year to the next. EBITDA losses, however, did grow. For the full year 22, EBITDA losses were 722 million, which is a slight increase on the $676 million loss in 2021. But I think there's probably several fairly easy to understand reasons for that. 2022 was a huge year in gambling. You had the launch of New York, which had a lot of associated costs. You had the kind of catastrophic campaign in California, which cost a lot of operators a great deal of money for really no reason at all. It was like $500 million between both sides was spent on the tribes and the commercial operators trying to tear each other apart, and actually doing a pretty good job of it, but it meant that nobody came out of that any better off. But with that said, $722 million EBITDA loss in 2022. The outlook for 2023 is broadly positive. They're narrowing their losses and they expect EBITDA losses between 350 and 450 million, which is about half as much as they lost last year. With the results at the end of 2022, they increased revenue guidance for the full year 23 up to 2.85 to 3.05 billion. So it's, it is a huge revenue generating business. And they are expecting a turn to being EBITDA positive in 2024. So I think that trajectory has been a little bit longer than a lot of their investors were hoping for. Like I say, it's still trading at a pretty massive discount to its all-time high. Of course, if it can get back up to those prices again once it's turned to profitability in the next, who knows, 3, 4, 5 years, I think still there's an argument to be made that a lot of these US stocks remain undervalued because of the scale of the opportunity. And as we've seen time and time again with the market share figures in the US, it looks like you couldn't find many better companies to bet on than FanDuel and its parent company Flutter, DraftKings in second place, and then BetMGM and Caesars. And beyond them, there aren't really very many companies who have a significant market share at all. So, I think it's a reasonable bet. I think it makes a lot of sense that people were waiting to see what those results were, but the results are heading in the right direction. And that's my view.
Great.
That's my take on it.
Thank you very much, Connor. Nice comprehensive summary there, but we should add nothing we say on weekly news constitutes investment advice, of course.
And it does
not. So I think actually we've got a graphic, another graphic for you to show DraftKings 3-month share performance. You can see it there. And according to data from MarketBeat, the company currently has an average rating, so an average analyst rating of hold, so neither buy nor sell, and a consensus target price of just under $23. So still some growth in the consensus analyst estimates as well, it sounds like. Thank you very much, Elizabeth. And I think I read somewhere this week that about 35% of DraftKings stock holding is kind of retail investors. The rest of it is either kind of management or institutional investors. And I was thinking, like, what is it that's happened over sort of the past 3 months or whatever that has encouraged them to be optimistic about the stock? And there were a few things that sort of came into my mind. One was the super long Twitter thread from Jason Robbins in March, where he basically said, I've never been more confident about DraftKings' future. Super bullish from a chief executive that's got skin in the game. So I think people will be pleased to hear that. Also, we've had a bit of a laugh about executive compensation and that kind of thing, but they are cutting costs and they are looking to be a lot more efficient than they ever were previously. I think it said they cut like 140 jobs or something last year and expect headcount to be 10% lower again next year. So, reducing that kind of bloat that came along with the pandemic that we've discussed before as well. And the only other thing was the kind of diversification of the products with DraftKings Horse. So, not only gaming and sports betting, and obviously historically DFS, but a bit of horse betting thrown in there as well now, if you're that way inclined. So lots to get excited about, I suppose, which explains the 75% 3-month rise. But then right at the other end of the scale, we have 888. And again, I think we've got a graphic of their 3-month performance to show you, which does not make as pretty reading. So just to flag, by the way, this is part of a new feature we've launched on iGaming Next called Stock Market Sweep, which is going to be a quarterly feature. Sonia wrote the first one, and you can see her commentary there. It's been a horrible quarter for shareholders of 888. Stock was down 41% in Q1 and more than 74% over the last 12 months. I don't want to spend too much time on this, fellas, because obviously we've spoken about 888 in the past and the various reasons for that decline, including the fact they don't have a chief executive at the moment. But is there any comments you wish to add?
Yeah, if you just take a look at the stock market price and the underlying reason why it suddenly literally had a downshift, it was based on their issues with how to phrase it in a best positive way. There was, just phrase it like this, there was room of improvement for their AML policies and processes in the Middle East. And as soon as this news actually hit the floor, the CEO was let go. And that was pretty much the underlying reason why we see a stock literally going down like a waterfall. And just remember, and I'm pretty sure we covered this one besides the great articles from iGaming Next. We also covered this one in one of our editions in February. So just look up the underlying story. We covered this very well, and then you know why the stock just went down like this.
Yeah, nice.
It looks like it's been a series of unfortunate events for 888. Sort of starting, I guess, with the acquisition of William Hill's non-US assets from Caesars, which I think the consensus now is that was bought at a massive overvaluation at probably the worst possible time, immediately before markets started to react very negatively to macroeconomic factors and so on. So that valuation was kind of a bit inflated. I think they ended up overpaying for that. And ever since then, it just seems to have been one thing after another, really. They've had fines and regulatory problems, as you mentioned, the trouble in the Middle East. So it's a bit of an uncertain outlook for 888's future, for sure.
Right, you are, Connor, but they're not the only ones down there. Obviously, as you can see on our graphic there, it says BetMakers and PointsBet, which are two kind of Australian companies. BetMakers down 42% in Q1, share price obviously, and again they're another company that is not making a profit at the moment. They reported a loss of $89 million Australian for 2022, and investors don't take very kindly to that at the moment. While PointsBet shares are down 19% over the same period. So there we go. That's our stocks roundup. I would like to say hello to Henrik, Ran, and to Drew, who have all joined us through the broadcast. Hello, guys. Welcome. And on to the next topic, which I think today is on Norway. Hopefully Elizabeth can show you the headline here. But yeah, so Norway looks increasingly likely to introduce DNS website blocking for unlicensed operators, which, lest we forget, is all operators because they operate a monopoly model in the country. And this has been discussed a number of times, in the past, or they never really looked like happening. But now, from the 1st of January 2024, we could be in a situation where the government is effectively blocking unlicensed gambling websites entirely through internet service providers, which is not great for the industry, and also brings up other questions in terms of privacy and government overstep, etc., etc. So, Nico, let's start with you. What are your feelings on this story? Have you had time to have a quick read of it today?
I just want to compare it with, first of all, Norway is just, kind of looking for ways and measures to, secure the licensed business. Just to give you an insight, we had pretty much the same in Germany as well, with Lottoland facing and DNS blocking as well, which was declared unlawful by a German court. So, First of all, of course, it's DNS blocking. What is DNS blocking? DNS blocking, besides IP blocking, is as soon as you type in the website, which is running on different hosts. So the domain name service, which is the underlying the acronym is DNS, and the underlying wording is domain name service. So as soon as you type in the website name, this will be routed to different IP addresses. So as soon as you hit the DNS blocking, the overall name which you type into your URL in the web browser can't be kind of distributed anymore. So you won't find the website. And as said, in Germany, this has been considered from the highest court as being unlawful. So although I did not specifically read the article about their wish in Norway, I'm pretty sure they have the same underlying law as well. And that's why I don't see it happening in Norway for the unlicensed business in gaming, at least.
Yeah, really interesting parallel there, Nico. I was going to ask you about Germany, and you saw that coming a mile off. So great insight. And it's worth saying that the government has said this will apply to unlicensed operators that are kind of actively targeting Norwegian consumers. So Norwegian language on the website, that kind of thing, basically. But we know that Kindred Group is involved in kind of a long-running legal dispute with the Norwegian Gaming Authority. It's obviously operated in the region previously, and I reached out to them for some comments about DNS blocking today, and they've actually replied whilst we've been live on air, and they haven't minced their words. So here's a kind of exclusive quote. DNS blocking is a comprehensive and deeply invasive measure, setting a disturbing precedent by restricting the freedom of speech and choice. In addition to breaching fundamental rights within the European Economic Area of the freedom of trade in goods and services, Kindred finds it is also of concern that the NGA will be given the right to restrict these fundamental rights without sufficient judicial or democratic control. So strongly worded statement there from Kindred, and also goes back to what you were saying, Nico, about whether there is a legal basis for this. Now, Norway's obviously slightly different because it's not in the EU, but it is still in the European Economic Area. So I expect this one to probably go to court and continue to kind of run legally. So yeah, one to continue to monitor, I think. One thing I found interesting, though, was why or how the government has kind of, fallen on this side of the decision in terms of protecting the monopoly in Norse tipping, when, especially when you've got other countries that operate on that model, like Finland, for example, who at the end of last year, you actually had the monopoly operator itself say, this is damaging the market, this is uncompetitive, and not only that, but we're losing crucial revenue here because obviously players are going offshore because we're not able to offer a competitive product, basically. So I find it interesting the kind of contrast of views of both of those countries. I'm not sure whether you have anything to add on that, either of you.
Yeah, it's certainly an interesting comparison, Jake, and I think that the the main thing to consider now is that whichever way this goes, I will point out that the report that we've seen today, which is from a Norwegian business magazine called E24, I think, they suggested that plans will be submitted to Norway's Supreme Legislature in autumn this year, with an attempt or a plan to be able to enforce these DNS blockings from the 1st of January next year. I think whatever happens now, it's going to be a headache for the likes of Kindred and Betson, who have significant business in Norway. I think whether it goes to court or whatever, and of course they are, as we've already discussed, they're quite prepared to defend their position. It's probably going to be a bit of a headache. I had a look at their 2022 reports today just to see how much they said about Norway. And I think being a grey market, they don't go into too much detail. But Kindred said that in Q4 2022, gross winnings revenue was negatively impacted to the tune of around £6 million by regulatory headwinds in Belgium and Norway together. So we don't know how much of that's attributable to Norway, but it's obviously a decent chunk of their revenue. And it's these kind of problems is slowing down their growth, it seems. Betson, meanwhile, said that revenue from the Nordics, including Norway, was about 52 million, I think, 53 million euros, which was an increase of just 2.4%. So just like we see in the UK and a lot of other mature markets, the growth has kind of started to flatten out there. 2.4% growth is certainly nothing to write home about. So any negative impact to that is perhaps going to lead to some negative growth in those areas. And I think it's going to be a big concern for the likes of Kindred and Betson going forward.
And Kindred Group said that instead of DNS blocking, a much better approach would be the implementation of an open and transparent licensing system. And I think there was some political support for that in Norway. Mm-hmm. Previously, I think your story says, Conor, that many favoured the introduction of a system sort of similar to those that are in Sweden and Denmark, but obviously the governing party has appears to have decided otherwise.
Yeah, it's unusual because Denmark, I believe I'm right in saying this about Denmark. Denmark is forever ordering the blockage of unlicensed websites from outside its regulated market, even though it does have an open and competitive commercial licensed market. So that, to me, thinking about it, trying to think about it as objectively as I can, that seems to me to be a fairer system, that you would implement rules and regulations for those companies who want to join your market in a fair and competitive way, and then block out anyone who wants to do so without paying local taxes and license fees and all the rest of it. That, to me, seems a more reasonable approach than what's happening or what's being suggested in Norway. But yeah, I think it's one of those kind of knife edge issues that could have gone either way, really. And it depends on the makeup of the Norwegian parliament, just which way the cookie crumbles. So it seems, seems like at the moment, the general opinion among Norwegian politicians has slipped towards supporting the monopoly model, but quite unusual in a modern European market to keep supporting that. It's one of very few markets that operates in that way, isn't it?
Yeah, exactly right. And Finland is the last one in the EU to operate like that, I believe. Okay, really interesting. Last week, I noticed you had a special guest on, to obviously make up for the massive gap left by myself, in Carolina from Beyond Play. And what we've heard, that was a really interesting interview, by the way, guys. Well done. And what we've heard kind of non-stop this year is that startups and growth companies are finding it incredibly difficult to secure investment because of the wider economic situation and uncertainty amongst investors. Basically, they want a sure deal. But that doesn't appear to be the case in the gambling industry, at least, because not only this week have we seen Beyond Play net a really impressive £5 million funding package with just about everybody you've ever heard of in online gambling supporting. But profits as well. The US exchange operator startup has also announced a $10 million funding injection to improve its product and add some new markets. So, is that all a complete myth?
Nico, what do you reckon?
Yeah, first of all, thank you once again for putting me on the hot seat. So, I'm pretty sure. And first of all, comparing this in the overall landscape of investment rounds, Series A, B, C, D, whatever. What we can see, and just remember, when our friend of Maxembet, Daniel Gretzer, was looking for additional funds, and I'm seeing Daniel being on the same expertise and level like Carolina is as well. So he was more looking for a bigger investment, 30 million plus, so a Series B round. What we can see is that companies who are looking for Series A money, they are still getting the money. As especially the heavyweights. If you mentioned this one, Jake, with Beyond Play, and once again shout out to Carolina. Although our view on Beyond Play might be a little bit biased, as Beyond Play and Carolina belong to the iGaming Next family. Unfortunately, today we could not be joined by one of the investors of Fetcher, Mekan, who was also one of the names which just pop out, being one of the investors, to just get an outside view on this one as well. But I was chatting with him earlier. Unfortunately, he has no voice, as he's quite sick, and once again, get well soon, mate, from here. But what he literally stated in between the lines, and this is what we always see as soon as it comes to seed rounds, sometimes it's not just the overall idea of a startup, but it's more the entrepreneurial spirit of the leader, which people actually invest to. And without a doubt, Carolina, first of all, she lined up a big team around her, household names. And this was one of the underlying reasons as well why Fetcher just spent the money. And he was like, okay, cutting a long story short, Carolina is a mad warrior. So as soon as she just steps into the ring, she will succeed, whatever she did. And this is a quite decent story and a quite decent track record, which also investors have a look at.
Yeah, exactly. And Fedger, is worth saying, is obviously the co-founder of Cafe Rocks. And he was joined in the latest round by Sporting Bet founder and serial investor Mark Blandford, who I'm sure we're all familiar with, and the Alea founder and chief executive Alexandra Tomic, who has spoken on a number of our panels at iGaming Next Valletta as well, a very knowledgeable man. So yeah, people that know their onions, basically, investing in Beyond Play. And yeah, Carolina said as much herself. We're excited to have secured the confidence and support of such reputable and knowledgeable investors.
Let me point out as well,
yeah,
because this funding round has been led by Better Capital over in the US, who have been really making a name for themselves in recent years. And their CEO, David Van Egmond, has joined Beyond Play's board of directors as part of the deal. And so I'm sure having a big hitting investment CEO with so much experience in the iGaming sector joining Beyond Play's board provided a lot of confidence to those other individual investors that you mentioned who joined Better Capital on that funding round. He joins Oakvale Capital's Daniel Burns, who's also a non-executive director of Beyond Play. So absolutely, as you mentioned, Nico, there's some real expertise behind this business. There's obviously a lot of confidence in the product. And of course, that will have been helped by the announcement that we made last week on the iGaming Next Weekly News, which is that Beyond Play has received its supplier license in the UK, and it's got supplier license applications underway in the US as well. Now, Jake, you asked if how hard it is to get funding is a bit of a myth at the moment. I don't know. I certainly think people are tightening their belts and have been for the last year or so. But the money is out there. There's plenty of dry powder, as investment people are so keen on saying. There's plenty of capital ready to be deployed where appropriate. And my own view on this, I'm not a venture capitalist, as you know, but if I were, I think I would follow in the footsteps of some of these investors in respect of investing into B2B. We see a lot of people doing this. So Better Capital, I don't know if exclusively, but certainly primarily are invested in B2B ventures. In fact, I think exclusively. Waterhouse VC, which is led by Tom Waterhouse, who's, you know, one of Australia's best known bookmakers, operators, that is to say, is now focused exclusively on the B2B side. And I certainly think there's an argument to be made for that, which is that, you know, it doesn't really matter what happens between all of the operators and their relative competitiveness with each other, as long as, you know, if a majority of them are using your B2B product, or if a large number of them are using your B2B product, then you are onto a winner in that respect. So I think B2B is probably a lot more attractive for investors at the moment than the B2C sector, especially when you're looking at the US, where you know, it's very difficult to get a challenger brand to make a big impact there. With that said, as you mentioned, Profit Exchange, which is a B2C operation, has also secured its latest funding round, and I think this is one to watch. It's one of very few companies who seem to be taking a bit of a risk in the US and trying to do things differently to the status quo. So they are the first regulated peer-to-peer betting exchange in the US, and they're live in New Jersey, and they're now looking to expand their presence across to other states, which is certainly an interesting story to watch. Who's to say if 5-10 years down the line, peer-to-peer betting doesn't take off in the US and become a major challenger to the sportsbook brands that we see dominating there at the moment. What do you think, Jake?
Yeah, really interesting this, because as you point out, exchange betting is kind of even more of a niche in the US than it is in the UK. And we've only got a handful of companies out there, of which Profit is one, offering that kind as a vertical to consumers. The others are Sport Trade, which I think has been on our Hot Six panel once or perhaps twice, Mojo, and a company called Novig, which hasn't actually launched yet. So limited competition. It's worth pointing out that there are a lot of challenges when it comes to operating an exchange bookmaker. And a massive one of those is basically a lack of liquidity. So basically not enough cash that's being traded on the platform. And I think this investment is going to be primarily geared towards increasing that liquidity, as well as adding new, better markets, improving the product through kind of, you know, new payments technology and things like that. And then once they've proven that kind of proof of concept and upgraded the product in New Jersey, then they will look into how they can roll out into additional states. But as always, just before we came on air, I was lucky enough to get the new Eilers and Krejcik Line newsletter, and they said that two of the big investors in this 10 million round, NinjaBet.com and the Chicago Trading Company.
Beat me to it. I was going to mention that.
Well, they are potentially going to act as market makers, so they're going to add liquidity to the platform by basically flooding cash in as bettors, basically as market makers. A little bit similar to what we've seen happen in the UK with the kind of VIPs on Matchbook, if you like, or BetDAQ or those other exchanges. But Yeah, very interesting business concept.
That wasn't what I was going to mention. I have another comment, something I thought was super interesting when I was reading up on this story yesterday. So, yes, the $10 million comes from a trio of new investors, Mixi Inc., which is a Japanese company, I believe, and as you mentioned, NinjaBet.com and Chicago Trading Company. The thing that caught my interest is that NinjaBet.com, if you go to that website, you will find information on how to pull off matched betting, which is a guaranteed kind of income thing. Because, of course, if you want to do match betting and use operators' generous bonuses to place bets on certain events, you have to be able to lay those bets on an exchange. So that's something that became very popular here in the UK a few years ago, and I believe it still goes on, although operators undoubtedly have clamped down on people sort of abusing their bonuses in that way. But it's interesting to see that a matched betting community is actually becoming a shareholder in a betting exchange. And I think together, those two companies could prove to be a thorn in the side of some of the big operators out in the US. I just thought that was a really interesting dynamic to think about.
Yeah, well pointed out, Connor. I think that's a nice summarising line from you, actually. Time flies when you're having fun, gentlemen. We've only got 4 minutes left. It's absolutely flown by today. And the audience participation has really helped as well. We've had loads of comments in the chat, and I want to say thank you to each and every one of them, because that makes it really good fun for me, Nico and Connor, every week, and whoever happens to join us on the broadcast. So without anything more to add, I suppose we'll see you at the same time next week, gentlemen. I hope you've enjoyed it as much as I have.
Sounds good to me. I certainly have. I hope everybody else has too. Thanks, Jake.
Thank you very much. And you have a good week, Nico.
Okay, same to you.
Cheers. Bye-bye.
Okay, guys.
Bye-bye.
Summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.